Good day. Ira Epstein of Linn & Associates with your metal market wrap-up, and this is for Tuesday, and we are now at August 3rd, 2021, about 5:15 in the afternoon. Now, before I go anywhere here, remember we're going to have the live webinar tomorrow. You are invited. If you have questions, it's when you get and sign up for it, in the invite part that you get with your user ID and password, your confirmation, is my email address. Click on it, write me the question, it'll come right to me. Can it be any simpler? Give me time to set up the charts is the idea, but I will open the chat room at 12:15. We will start promptly at 12:30. We will end before 20 minutes is up. So that's my rules with it, and I'll cover everything we can. It could be earlier. I mean, if we don't get enough questions or charts to be asked for, it could be a 10-minute chat room. That hasn't happened yet, but we'll see what goes. If you haven't received my email with your invite, you see up here this icon? Simply click on it. That's how you get into the part of it. Fill out the form and then come back and watch this all that you want, but get that done. So, in the metal markets, we saw that the dollar pretty stable today. In fact, most currencies were fairly stable, and you can see that again. The gold market having trouble here getting and staying under the 1800 level if you're a bear. If you're a bull, it's not breaking out to the upside. We'll show that in a minute. Silver's starting to gain a little bit on that market, and the copper market got thrown back, and copper's down because the story is how bad is the COVID outbreak in China, and they're the major consumer of copper right now. Now in the United States, you see how bad it is. You saw the president today pleading with people. I just read an article, could not have been 10 minutes ago, that said that you have to get up in the herd rate now to maybe near 90% with this new variant. Well, given that we're only up in America to about 70% of those eligible for vaccines that have got it, that's another 20%. I guarantee if those people were to take a look at the hospitals and what's going on, they might reconsider their position. Then again, they might not. They're going to be punished, though. They're not going to be able to get jobs that they want necessarily. They'll go to a restaurant. If they don't have the card with them that shows they're vaccinated, they might not be let in. There's many things that are happening. In other words, got to be careful. They're being ostracized. Very important key there. In the gold market, you can see how the market's just sitting on this 18-week moving average of closes. It hits it, it backs off. The market is $5 under it right now, but I call that sitting because it fluctuates during the day back and forth against that number. For the week, right, as an example, you've got an 1870 range to 1804.80. When you come to the daily charts, you've pulled back in here. No surprise, the market made a double top of sorts up here into the 1840 level. But the pattern is still bullish. You have higher lows, higher highs, and I've left this red line, which was to me a breakout pattern on the chart. To prove that it's going to falsely, that was a false move, you have to get and close under this area right through here. What about where the market's fighting the battle? It's so clear. It's the 100-day average in green up to the 18-day average, and you're just going back and forth. You had one spurt to the upside about 3 days ago where you hit the upper 200-day average. You also hit at that point the upper Bollinger Band and came smashing right back down. What about momentum? Well, when you look at the slow stochastic, it's just drifting. It is slightly pointing down, and the market at 1813.40 is on the daily chart under the 18-day average of closes. So that means that you've got the trend up, the bias down, caught in these moving averages. It's just not the place to be. In the gold-silver ratio, here's what I've been saying. The market is now slipping back underneath this 18, and this is the 18-day moving average of closes. When it does that, it starts to move that if these numbers drop in a perfect world, if you were to fill up your shopping cart with silver ounces, that's how many ounces you'd have to get an ounce of gold. So obviously, gold is stronger than silver. The higher the number, and under that, it's got bearishness to it. What's the pattern on the chart? It's still mixed. It could easily, if you start taking out these highs here, turn up, but you've got to get back over this high right here of 25.87.5. Right now you have a lower low, higher high, and that's like an impossible pattern to trade. And guess what number you're stuck at? I think you'd agree with me. That 18-day average of closes, with today 5 days there, and the momentum has come out of being oversold, but it's not saying, hey, we're going to pick up and run. Let's assume you clear that 25.87. You've then got the 200-day average, the 100, and the upper Bollinger Band. In other words, a pretty rough road between 26.05 and 26.51. But that doesn't mean you wouldn't be in an uptrend. What gets you back into the downtrend? See this 25.27? If the market now breaks through that, well, actually, that's not true. I'm not right on that. Got to throw today's data off. No, that's not true. There is nothing that I see that does it. You can't start the trend down, but you can get the trend to go to the upside. Today's action is not a settlement price yet. In the copper market, you fell right back into the major support of the 18 and the 100-day average of closes. You worked off as you did that an overbought condition where you had these numbers. Anything over 70 is overbought, and you see what the market did with that. The next thing that we have is the platinum, which is still in a downtrend. Now, is it going to embed? In order to embed, embedding means you're converting from being either overbought or oversold into a solid downtrend or a solid uptrend, a locked-in one. Well, it takes both numbers to stay underneath 20 to do that for several days in a row. So day one was yesterday where you had that, not the day before. It's that simple. You have an oversold market that has hit in the past its support zone. It's caught between the lower Bollinger Band and the 18-day average, and still very much in a bear pattern, but I don't think oversold conditions attract new selling. In the palladium market, as I said to you the past couple of days, the market is number one oversold. To turn the swing line up, and the key resistance began at the 18-day average to the 100 in the green. All this is a trend up with the bias down. Why is the bias down? As long as the market's settling under the 18-day average of closes, the bias is down. Close over it, the bias up. It filters the swing line. And all you did today is get up to that number and let go again. So it keeps running into the resistance there, and it's working off and out of an oversold condition with these prices right now. So that could attract new selling. That's the difference. In the dollar index, if you were to get over 92.18, that would end this downtrend leg. You could also begin a pattern of higher lows, higher highs. Now, while that trend would be up, the bias is down until you close back up and over 92.49. You're very oversold, which means I don't think you're attracting new selling in the market. In July Ethereum, this is still bullish. Higher lows, higher highs. First challenge of the Bollinger Band, you fell back. And when you get over a 100-day average on the first challenge is back, typically as a chart, it finds support at that number. It's what it's doing. Is the market embedding? Well, both numbers today are, but you can't go by today. You got to go to Tuesday, and they weren't. So you have an overbought market, no more than that, in an area here trying to figure out what to do. Again, I don't think an overbought condition attracts new buying. So you put it together, you try to come up with a game plan, and it's wild. One of the things I've been using right here, and I'm using it like mad right now in the stock indices, is the enhanced Bollinger Band course, and I'm proud to say I'm pleased. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work